Welcome to the Strategy of the Week presentation for June 28th, 2013. My name is Todd Shaffer. I'm the Manager of Research for VectorVest, and I'll be providing your presentation this evening. This week, it brings me great pleasure to announce and demonstrate a new functionality within the VectorVest 7 platform. We continue to innovate and increase the functionality of the VectorVest system to take us into the next 25 years. Last week, we covered changes to our Welcome tab. This week, we add new functionality to our Backtest tool with the creation of a new trailing stop function, which allows the incorporation of target gain and max loss stop criteria. Let's take a look. In the VectorVest program, you'll find the new stop methodology available in both the Backtester and the Portfolio functions. Let's go up and click on the Backtester tab. And I'll choose to open a new Backtester with Backtest and Idea. Leaving all our defaults in place, we're going to jump right to the automation rules for confirmed up. I'll click on that box. I do need to select a strategy, so I'll just pick one. And the Stop Criteria tab is where we house our new trailing stop functionality. And if I click on a trailing stop, you now see that I have the choice of setting the value for the trailing stop, but I can also choose to include or exclude target gain and maximum loss values. Tonight we'll discuss how these different stop loss techniques function, and then we'll also do a little demonstration to see how we might effectively use this new combination stop. We'll begin with the trailing stop. Here I'm showing a generic price chart with the stock's daily price represented in candlesticks. As implied by its name, a trailing stop trails price action by whatever interval we set. For this example, we'll use a 10% trailing stop. Here on our chart, we see that our purchase price is $11. That means our initial trailing stop would be set at a value of $9.90. As price increases, the trailing stop also rises to maintain that interval of 10% from the highest price after purchase. It's never adjusted downward. One of the benefits of this approach is that there's no upper limit set. It allows a winning position to continue or keep on running. The challenge can be that you'll always give back some of your gains. In the case of a 10% trailing stop, I've signed up to give back at least 10% of my maximum gain. So if I reached a high price of $13.30, which represents a 20.9% gain over my purchase price, it will stop out after it retraces that 10%. I'll sell out at $11.97, which ultimately is an 8.8% gain from my purchase price. Additionally, in an effort to minimize how much I give back, I may try to squeeze the distance between my trailing stop from, say, 10% to 5%. But in doing so, I may start to squeeze the normal volatility of the stock, especially when you get to values below 10%, where just in the normal price action of the stock, you'll stop out on your trailing stop value. This can be particularly true of stocks that don't have a nice trend line established. Our other approach is to set maximum gain and maximum loss stops. Let's examine those. Here again, the same price chart, and again we'll have the same purchase price at $11 and the same 10% maximum loss set now at $9.90. As the name implies, we won't adjust that maximum loss. In fact, we'll also bound the top with a maximum gain, in this case 20%, which would be at a price of $13.20. Since these price levels don't adjust with price movement, we're setting an upper and a lower limit for price movement to define our risk and to capture our gain. We allow the stock to bounce and we patiently wait for it to play out either as a gain or a loss. The benefit is it gives the stock room to move due to volatility or retracements. A big price action day won't knock you out of the stock position. The challenge can be is price action doesn't reach the gain stop and reverses, you can watch a winner turn into a loser. And this is why we've advocated over time of never giving back more than half of your gains. Our combination stop tries to take the best from both worlds. I can control my maximum risk and I can capture my maximum gain, and the trailing stop makes sure that I don't give too much back. So on the combination stop, with my original purchase and initial stop criteria, the trailing stop portion will move upward with price action as before. But when combined with my maximum risk and loss criteria, I can now capture my maximum gain, and the trailing stop makes sure I don't give too much back if I fall short of the maximum gain. So let's go for a test drive in the VectorVest 7 backtester. And let's set up our based run. We'll click Backtest an Idea. We'll leave all our default settings for the account settings. Come to the bottom and click Next. Next, we'll use for our market timing signals, we'll use confirm calls. Now you do have to have the auto tester to have this timing function within your backtester. If you don't have the market timing option here, you can turn it on for a 2-week trial and click the link in the views to get our special offer. So we'll just use the last up run we had on the confirm calls. I did a little research in the tote board, and it looks like Angie's bear beaters did well over that last market turn. So let's take a look in the bear market beaters folder and find Angie's bear beaters. So we've set now that when we get that confirmed up call, we're going to buy long. We're going to use the Angie's bear beaters search. For our stop criteria, we're first going to create our base run and use none. And in the more settings, we'll leave all our defaults. 10 positions, automatically replace closed positions, open all 10 immediately. When entering the situation, close any open position, use average portfolio value per position, odd lots, limit repurchases for those I currently own, and leaving the balance of our settings at their defaults. Coming to the bottom, we'll click Next. For the automation rules for the confirmed down signal, we'll just go to Cache. Again, coming to the bottom, we'll click Next. For our test period, I just want to go back to the last confirmed up call we had, which was on January 10th of 2013, and we'll run that to the following confirmed down on April 2nd. We'll give us a name. Let's call it Angie's Bear Beaters Base Run. And we'll come to the bottom and click Finish and Run. Well, that ran fairly quickly, not having any stops. Let's maximize our space here so we can see what's going on. And the first thing I notice is I still have pending orders, so I'm going to advance this one more day so that I can get those positions closed, because I want to look at the trade history. So I'm going to run this forward just to the 3rd and let those positions close out. Now I have no holdings in the portfolio, and you'll see why I wanted to do that here in just a second. This is our base run, and just looking at the equity curve, we do see some volatility in this equity curve with a couple significant pullbacks here within that curve, and it just has a rather sawtooth price performance. Looking at the numbers, we had a total gain of 4.73% or 20.82% annualized with a maximum drawdown of 3.97%. If I go to the reports menu, and this is why I wanted those positions to close, because I want to look at trade history. And if I scroll over to the percent returns, and we'll sort that by percent return, notice we had a couple double-digit gainers, and we also had one double-digit loser, with the highest gain at about 22% and the biggest loser just under 23%. But what we don't know is how the stocks performed before they reached these closing values. Did they rise then fall? Did they fall then rise? Or did they bounce around for a while? Well, our typical approach at this point is to test multiple stop combinations against this test bed to try to set up some fences or some guardrails around the performance of this portfolio to try to optimize our performance. So I would come back and strike a copy of my base run. I might now come in and establish a range of stop criteria. I ran a gain loss of 30-10 and had some nice results. So let me set that up here. A 30% gain and a 10% loss. I'm going to change my name to include that stop combination in the naming convention of a 30/10. And we'll click Finish and Run. So the only thing we changed was the addition of some stop criteria, and maybe I'll open up the graph a little bit. We see our equity curve is still pretty volatile, still has those two pullbacks. In fact, even goes underwater here back in February. And if we look at the hard numbers here, we see that our gain did improve from 4.75% to 9.33%, which translates from an annualized basis from 20.82 to 41%. We did have about 1.5 more times trading activity, and our percentage winners fell a little bit, while our max drawdown also increased from 4 to 4.5. But now I have defined risk. I've got better annualized rate of return. And I've got a slight increase in the drawdown. I might have been satisfied to stop right here. But let's see if we can't capture some of the winners before they retrace and turn into losers. Let's add a trailing stop of 10%. So we'll come back to the top and click copy. Come back into our automation rules for the confirmed op. Go to stop criteria. Choose the trailing stop. And now we have a 10% trailing stop, and we'll use our target gain and loss of a 30% gain and a 10% loss. And we'll change our name to reflect the change. And I'll just add a /T for trailing 10. And let's finish and run. Looking at the equity curve, I'm not sure I like this result much at all. I still have volatility with my price line, but now I've really just moved sideways for the first 2 months of this back test, which is not my goal, although I did seem to perform better in the last third of the test. If I look at my numbers, we did increase our gains from 9 1/3 to 10.5%, annualized from 41 to 46. But I've got almost twice the trading activity, and my drawdown has gone up from 4.5% to 6.5%. So I've increased my gains with a lot more trading activity, almost twice as much trading activity, and a 2-point increase in drawdown. Perhaps my 10% trailing stop is too narrow, that the stocks within this test bed have more volatility than that 10% spread will allow. Let's do another run, and this time we'll try expanding the trailing stop. So let's change from a 10% stop to a 20% stop. Again, we'll update our name and click finish and run. Now we're making some progress, and you can see it right in the equity curve. Much less volatility than our original curve. We did have a little pullback here at the beginning, but a nice steady uptrend with a lot less sawtooth in it. If we look at our overall numbers, we went from a 10.5% gain to a 16.25%, from 46 to 71% annualized, and our drawdown fell back 3 points from 6.5% to 3 1/3%. Our trading activity fell back to the 1.5 times of the base run, and in fact, look at the annualized rate of return, almost 3.5 times higher than that original base run, at a lower overall maximum drawdown. Finally, if we take a look at our trade history in the reports section, we see 11 winners, 6 losers, 9 of the 11 in double digits for our gains, all of our losers in single digits. A nice improvement over our original performance. So I hope this whets your appetite to explore this new functionality within the VectorVest system. Another powerful tool in our toolbox to build winning trading plans. Well, that'll conclude our strategy presentation for this evening. I thank you for being with us. If you have any questions or discoveries you'd like to share, please give us a call on product support at our toll-free number, or email us at productsupport@vectorvest.com. Until next week, have a great evening.